Welcome to Fintech Brews and News, brought to you by Central Payments and Falls Fintech. I'm Nikki Rohde.
And I'm Thornsberry.
Founders, co-founders, payments professionals, and, well, just people who love brews. This is a place to get a behind-the-scenes look at unique partnerships and ways to bridge the financial gap between banking, startups, and the entire fintech industry. Whether it's a beer or coffee or something else, there's certain to be a brew in every episode. After all, how do we function in this space without it? Each episode, you're sure to take away some good stuff going on in the financial technology space. So without further ado, let's grab a brew. Hey guys, welcome back to another episode of Fintech Brews and News. I'm Nikki Rohde.
And I'm Thornsberry.
And today, like a lot of other episodes, we have guests that join us. And today we have a very special guest, Sherry Thornsberry. Welcome to the show.
Well, thank you. I'm happy to be here.
It's so great. You are senior consultant at ROIG Group. So for the sake of the audience, talk about what ROIG Group is, what does it stand for, and how did this company come to be?
And why are you in Sioux Falls, South Dakota?
Yeah, of all places, yeah.
I don't know, because I love negative temperatures and all the snow.
Yeah, all right.
Lies,
You know,
lies.
I live in California, so I haven't seen snow for a while. So I decided to, take a little trip to Sioux Falls now. So just a little bit. So my role at ROIG is I'm actually the practice lead for the Financial Services and Payments Division. It's a relatively new practice that we started about a year and a half ago. So ROIG has been in business for some time now, small boutique consulting firm based in Minneapolis, primarily made up of consultants who have sat in seat. So very different from some of the bigger guys. All of us have worked in corporate America. We know what it's like when we work with our clients to be on the other side, and generally have a lot of experience in executive level roles and certain subject matter expertise in different practices. For us, obviously, payments and financial services.
Yeah, so let's walk back your career, because you have been around payments for a long time. Take us back and when you sat in those seats that you were talking about.
Sure. Yeah, so I've probably been in the payment space about 25 plus years. So like you said, a long time.
Ditto.
Not
Yeah,
nearly
I
as long
know,
as
I know.
this guy.
I knew you were into
Yeah,
that.
there it is.
Well, definitely longer than you, Nikki. So,
Barely.
so really have worked in various types of companies within what I call sort of the value chain. So started my career actually originally in HR. So I was a CHRO for a small company that was a jointly owned company between American Express and a company based in St. Louis, Missouri, Merritt's, in the incentive space. And so came on as CHRO, and Nikki will understand as things go in a smaller company, hey, listen, can you take on legal? Maybe you could take on some of our licensing activity. And then, all of a sudden they're like, well, we really don't want you in HR anymore. Let's move you into the business. So did that and spent a lot of years there. Last role there was COO. And then we sold to Blackhawk Network. So we were the first acquisition that they made in the B2B space. And shortly after that, Blackhawk asked if I would be the GM of the B2B division for them, and really built that division over about a 5-year time frame with probably no less than 8 acquisitions. So really intense M&A activity, super interesting, a lot of fun, a lot of great people there. And so I understand, all the talk about synergies, and it's great to say. It's harder to actually activate on, but, a lot of great success building that adjacent market for them. Then was tapped by folks that I knew at MetaBank, so had a longstanding relationship with them from an issuer perspective, and they were creating a role head of payments and asked if I would come on board. Of course, I said I don't know anything about banking. They said, we'll teach you everything you know. And I showed up, and I remember the CEO, who was my boss, said, hey, listen, just want to let you know, I'm going to be going to Africa for the next 2 months, so do your thing.
Thank you for the introduction.
I know. So I sort of had to teach myself a little bit about banking, particularly the financials, but spent about another 5 years there as head of payments. So ran their payments division. Once upon a time, had a little bit of HR responsibility, and then also for interim times ran their tax and their consumer lending divisions while we were looking for leads in those areas. So decided to leave there when I had a personal move out from the Midwest to California, and was kind of, what do I want to do now? And about 30 days later got a call and said, hey, listen, from the ROIG Group, who we had worked with at Meta, would you come and potentially start this practice with us? So here I am today.
I think we missed one step on the ROIG. It stands for?
So it does not stand for return on investment, which most people think. So if you're placing bets, that's not the right one. It actually stands for Revive, Optimize, Incubate, and Grow. And this is a framework that we use when we work with a lot of our clients to determine where they are in terms of the stage of life cycle that they're in. And what we find is that depending upon where you are, you're going to behave differently in order to be successful. And, obviously we want to move everybody up into the grow category, but, a lot of people are not there today. In fact, we just did a bunch of banking research and we found out while most banks act like grow organizations, about 55% of them are actually in optimize.
Interesting.
So some interesting insights there.
And so ROIG Groups, you and your partner, Shelley.
Shelley Schneekloth is my partner in crime, co-lead.
You are their first sort of venture into payments and fintech, is that right?
That is correct.
What drew them to that space? Other than obviously they had a chance to bring in two experts, but and I guess I really want to understand what crosses over from the other lines of business that works so well in payments.
Got it. So, so I would say that they were starting to have some experience. They did a lot of work at Meta Bank. And so they had a lot of experience from a couple-year program there in terms of learning about, the financial side and the banking side of things. And of course, Meta, about 75% of the P&L for a long time there was really based upon payments, a little bit in community banking. And then obviously when we started to, increase the portfolio and we bought the commercial lending division, Crestmark, then it sort of equaled out. So there was a lot of time that they spent with, the payments team, which was the core infrastructure there. And I think they thought it was interesting. And, we talked a lot about what was going on in payments and how it had been kind of sleepy, but then it was sort of waking up with all this infusion of fintechs and all this innovation was happening and how it became a pretty exciting place. And so I think they thought that, hey, listen, we think this would be a great practice for us to go into, particularly since we have access to some people who have been in senior level roles. Okay. Other practices are government, retail, and manufacturing that are strong with ROIG. There is a little bit of crossover we find with retail as it relates to some of our clients that we work with that have retail presence from a banking perspective. But I would say generally, since we're relatively new, we probably operate a little bit uniquely from the rest of the consulting firm, but use a lot of their frames and a great work that they've developed over several years.
What are some of the things you're seeing in the short period of time that you've been in ROIG Group? What are some of the patterns you're seeing across payments and fintech as it relates to your clients? I mean, obviously you're here because we're a client of ROIG Group, but just maybe at a high level, are there any emerging patterns or things that you're seeing repeat themselves over and over?
Yeah, so I mean, I think fintechs have entered the space and they've caused what I call positive disruption in the space. So they've gotten everybody excited, rejuvenated. They have a lot to offer. I think there's some really great solutions and services that are coming out of their entry into the space for a lot of folks that don't have access to mainstream financial services. But what I'm seeing is it's spinning up a lot of questions from people, should I get into the space? I think I should be in the space, or I think I should take on another role. So, I'm a program manager. I want to become a bank. We've seen some of that with some of the fintechs. Yeah, right. Are you really sure about that? Or, banks that are under the 10 billion in terms of assets that understand some of the legacy issuers are starting to bump up against that. And hey, listen, can we get in on it? Because we have lots of room on our balance sheet. And so what I generally find is there's a lot of excitement. There's a lot of moving from, I have a concept, now I'm going to move into execution. And they really haven't done the right work around strategy and planning, nor do they really understand some of the foundational work that needs to be done in the payment space in order to be, an effective provider.
So Sherry, let's talk a little bit about your work here with Central Payments. We brought you in on the heels of a cap raise at a time that most of my peers here thought I was crazy to bring in a consultant, given everything else that was going on around us.
I hear you.
A little bit of a sort of method to my madness was I felt like we were possibly two heads down and being too myopic on the way in which we were thinking about our growth strategy. And I wanted to bring in not just an experienced consulting group, but then one that understood our business. And obviously, Shelley and you both understand our business really well. What would you say if you think about companies like Central Payments, early stage companies? We're just in year 8, and I always say we're sort of in year 3. If you think about some of the changes that we did back in 2019, what are you telling clients now that are similar to things we've talked about here about, here's what growth looks like. Here's the right kind of growth versus other types of growth. I'm just curious about, when you think fintech, you have growth on your mind constantly, but there's good growth and bad growth. And maybe talk a little bit about that.
Sure. Yeah, I mean, I think, well, first of all, as you've heard me say, several times, we've really enjoyed the work that we've been doing with you all because, we do deal with a lot of people that are thinking about or looking at coming into this space. And so just their level of knowledge and education, is different than where you guys are. So we don't have to do a lot of teaching to you guys about the space, actually not at all. And we speak the same language. So that's been really fun for us just to kind of be able to weave ourselves in as an extension of your team. I think you're exactly where you should be. We often talk to early stage people about, do you have a feasible concept? Have you proven that you can make money at it? Okay, now how are you going to get to scale? Well, first of all, it's very clear with some of the brand names and the clients that you have a feasible concept. And it has a lot of really unique competitive differentiators, which is obviously great for you and fun for us to be working with you. And then you've proven you can make money, and so now for you all, I think we've talked about, it's like, how do we continue to scale and grow so we can build upon, the strong foundation that we have here. And, frankly, you do it with, a pretty lean staff. So that's very impressive. And so it's really interesting because I know a lot of you have a banking background, but you're a fintech organization. Mm-hmm. So you have a lot of, again, pieces and parts that I think make you very solid in terms of what you have to offer and being competitive in the marketplace. There's not a lot of other organizations, frankly, that look exactly like you. That's right. So, I think there's some uniqueness there.
But, we're not perfect.
Yeah.
And, there's always things we can do better. I'm curious, as you think about the way in which companies that, are looking at, because I think right now in fintech, we're experiencing externally a whole lot of changes in the marketplace, right? The capital markets have changed drastically. The regulatory climate, we talk about it all the time on Fintech Brews, is changing. I don't think I'd say drastically, but it certainly is different. There's a lot of change going on around us. How are you advising clients to adapt to that and build internal, organizational dynamics that can be resilient? Does that make sense?
Mm-hmm. Yeah, I think that, I think you're right about that. And we know the fintech dollars have dried up a bit, or more selective. And then I think the investors are watching more carefully, because we have select amount of dollars, we want to see a faster return. So that puts more pressure on organizations, to figure out what are the things that I need to do based upon where I'm in my life cycle in terms of making sure that I can effectively scale without, bloating the P&L. And do I have enough growth strategy in the pipeline to really create these expectations and meet them around the financials? And, are there places where I need to increase margin? And so I think everybody's dealing with a little bit different problem depending upon, again, where they are in the life cycle of their organization. All very common things. It's just knowing what that is and effectively planning around it. I also find, and again, we've all been guilty of this, believe me, I sat in seat for a long time, is that organizations generally undervalue the work that it's going to take to be, successful in the space, and they underplan for it.
That's right.
And so, there's usually a lot of, what we call franticness in an organization, people running around like with scissors in their hands and not really knowing what they're, well-intentioned, but not really knowing what they really need to execute on to be really, rock solid about getting those results.
So anyone who might be listening that finds themselves relating with some of those problems that you've mentioned, what would they do? When is the right time for them to engage ROIG? At what point do people typically come to you and say, help, we're struggling with X?
Well, I think it depends upon where the organization is. So a lot of times when we have organizations come to us and they want to make a no-go decision about moving into the space, they say, okay, well, we need a full-blown assessment. I said, we sit them down and we said, why don't we just teach you about the space? We've had 2 clients that we've worked with. We've taught them about the space in a very short amount of time, and they've actually decided not to enter. I'm out. Like this is much more challenging, and doesn't pull any of our core capabilities that we thought. We just thought it was just an easier entry to market. So
that's a really cool intentionality play, because sometimes I think you get your mindset on something,
yes,
and then you're like, this is what we're doing. So to take that move and then kind of realize that's not the right move for us, and then pivot from that decision, that takes some maturity as an organization.
No, it absolutely. And for us in consulting, while it's a short-term engagement, that's a win.
Yeah.
Because we're really in the business of making sure that we continue to lift up the payment space, and that we're all doing it in a responsible manner, so that any bad thing that happens, we know we're all under scrutiny, right, and we don't need any more of that, with all the challenges we've had over the last couple of years. So so we see those organizations, and then we see other organizations, like yourself, so they come to us in lots of different places and spaces. Yeah. If you would come to us at the beginning, it would be great. But regardless of when you come to us, we always do. They may come with a very tactical issue. The very first thing we always do is pressure test their strategy. Mm-hmm. Is your strategy complete? Is it robust? Is what you're trying to do going to align with strategy?
So if one is, let me, for 1 second, pull the thread on that a little bit. Where do you most often see the strategy falling short? What are the 1 or 2 things that you seem to be repeating over and over again as companies think about strategy?
Yeah, so I would say that very common is that people haven't really done a full market assessment. Like, is this concept feasible or not? Like, it's very much based upon, we've got a gut feel this is going to work, and so let's do it. And so there's sometimes struggles with, okay, we probably need more market data, particularly as we're fine-tuning the strategy or the solution or the service. I think the other place is that strategy is developed at the top normally, and it's not well communicated. So people below the senior leadership team are constantly running around saying we have no strategy, which may or may not be the truth, but maybe it just hasn't been communicated. I always say to CEOs, and I've had this said to me once upon a time, just because you say it's so doesn't make it so.
Hold on, wait, one more. Let's just pause there for a second.
Surprised you're not writing that down.
Copious notes by Nikki over there.
Interesting. Hopefully everybody caught that, because I sure did.
And then I would say the third issue is, while some organizations have a fantastic, robust strategy in place, they have no discipline around sticking to it. Because, again, it's a very exciting time in the payment space. And sometimes, that opportunity, we don't want to miss out. There's a lot of FOMO going on. Mm-hmm. I need to be part of that initiative. I need to be part of what's going on in the space. This is going to be the $1 billion revenue opportunity, which, as we all know, for people who have been in the space a while, I think there's very few of those that we've seen over, the last 30 years or so. And so I think there's a lot of those kind of things going on. So trying to build flexibility into strategy so people aren't boxed, but also so you can maintain some focus is a lot of the work that we do.
So you and Shelley recently wrote an article titled, "Every Company is a Payments Company, How to Ensure FOMO Doesn't Tank Your ROI." What was that endeavor like, and what were you aiming to communicate through that?
Well, you've probably noticed. So, I mean, the value chain in payments has like grown significantly. I mean, before it was like if you have a program manager, you have a bank, you have a processor, and you have the networks, right? And now there's all these people coming into the space. You've got fintechs, you've got technology providers, you've got, BaaS providers, embedded finance, which by the way are very loosely defined terms. So lots of different companies fall into those areas. And so it's sort of like, people are just popping up and saying, I'm in financial services, I'm a payments company, and they may be doing some very little pieces and parts, as an extension of the value chain. But I do feel like because of that, everybody is like, I need to get into the space. And what they're ignoring is, what are the things that you're good at and what are you not good at? What does it make sense for you to invest in and not invest in? It's sort of like when we saw, and it's died down a bit, hey, listen, I'm a fintech, I'm going to become a bank. Right? Well, to your point earlier, Trent, like, really, you really want to be a bank? Like, it's really hard to be a bank,
I always say, like, maybe if your expertise is around customer acquisition and user experience, maybe that's your runway. Maybe that's where you should run and find the experts and surround yourself with the experts to do the rest of it. And
Absolutely.
so, and I think you're right. I think at first everybody said, I think initially the fintech play was, we are here to displace banks.
Yes.
Now, and for a lot of reasons, I think everybody's starting to realize that maybe our displacement strategy wasn't right. Maybe this is a little more of a partnership strategy.
Yes.
And I think that's driving a lot of interest among the banks who viewed initially, fintech as either enemies or frenemies, at least. Now, all of a sudden, I think it can be mutually beneficial as you think about banks who want to expand product and do different products, expand their reach geographically. These are all the things Central did when we started here, and the fintech saying, "Hey, I'm going to stay in my comfort, in my lane, if you will. I'm going to acquire customers, and I'm going to build really interesting user experience. Old archaic rails." Let's leave that to the folks that are comfortable down in that level of infrastructure. I sort of feel that's going to be the future. I think that's where this is going to go, and I think it's more exciting than when everybody was fighting each other to say, I'm going to displace J.P. Morgan because I'm this neobank.
You hit the nail on the head, Trent. I mean, I 100% support that. And so, a lot of people ask us, well, do you think I should build all these capabilities? And again, we go back to like, what are your core capabilities and run with that? And then hire the, other subject matter experts in organizations to, support you through a, partnership program. Knowing what you're good at and what you're not good at. Nikki,
100%.
100% is like what you're not good at is part of your strategy.
That's right.
And don't overly invest in those areas. There's too many other people that are really good at those things that can support you in a really effective way.
I went to a conference out in Seattle not that long ago, and it was really interesting, and it has stuck with me because it was back when payments and fintech was really emerging a number of years ago. This idea of we're going to build whenever humanly possible, then we will buy if we need to, and last is partner. And the message was that has been completely flipped on its head. And now it's partner whenever possible, buy next, and absolutely last is build. And partially because the speed in which this industry is going, if you try to build everything, you will absolutely get passed by, and that technology will become outdated very, very quickly. And so one of the things Falls FinTech has even taught us is that message of what you just talked about, Trent, of fintech companies broadly being really good at customer identification, ideal customer profiles, business process mapping, and what they're really good at as far as building their app, that there's a level of pride that has to be set aside to say, I could do all that stuff, but I'm not going to do all that stuff. I'm going to partner with the right bank, the right program manager, the right payments company to do all the things that I'm not uniquely qualified to do. So I really appreciate that you guys are directing people in that same way. That makes a ton of sense. So one of the things that you said earlier, Sherry, that I thought was interesting is ROIG Group has this, you said, we've all sat in those seats. Can you go a little bit more about that being part of your value proposition? How has that functionally differentiated you guys from other
consulting groups, if you will?
Yeah, so I mean, I think that I mean, we understand the pressures of corporate America. Whether you're publicly owned, you're privately owned, you've got to get stuff done. A lot of the bigger consulting firms that we have certainly worked beside in clients. They're very much focused on let's develop a strategy and a plan, but it's not necessarily really practical, nor does it generally get put into execution. So we actually like to stay with our clients if we're doing strategy and planning work through some of the at least initial execution. And we really work as an extension of the team. We're not there to do the work for them. We're there to do the work with them. But, we're all about value accelerated. You don't have a lot of time in a day, in a week, in a month, in a year, to meet goals. And so how do we often use the term slow down to speed up? Let's slow down for just a short amount of time, get, our strategy or plan in place, and then let's just speed up through execution. And we have learned over time and through a lot of research, what kind of components and levers that we need to pull and help our clients pull in order to, maneuver through that slowdown period pretty quickly and then get to effective execution in the right way. So yeah, it's been an interesting experience, but I mean, I understand, when the CEO is saying something, the pressures, have had those same pressures. Most, again, of the consultants at ROIG have experienced a lot of things that you guys are experiencing on a day-to-day basis. So we understand the practicality of sometimes, the things that you're doing and what we're asking.
Yeah, it's rare in engagements, whether it's ours and I'm sure others are the same, where you have an opportunity to bring in a true peer who has been around as long as I have and understands the space so well.
Battle scars.
Battle scars, yeah,
battle
exactly.
scars.
But I mean, understands the relationship up, whether that's to investors or to regulators, et cetera, as well as relationships down to the rest of the organization that we're talking about. It's a rare boutique opportunity that I know from the client perspective. We needed that, and I'm sure many others find themselves in the same spot. So I know I told you earlier today it was a tremendous value to have you part of Central Payments over what really has been like the last 4 months probably.
Sure, just a bit ago you had talked about ROIG is engaged with fintech companies or anybody thinking about getting into the payment space, and you've helped them, even if it was a short engagement, go to this isn't right for us. Can you share an example of when you've had that same assessment and people said, okay, and you've determined that it is right, or they've determined it is right for them? What does that next step look like for them? How have you guided them to continue on that path to enter payments?
Yeah, so typically if, particularly if they're leaning heavily towards a go, we try to get them there, versus totally dissuading them. And so we do an assessment, which, generally we like to spend 12 weeks, but from a practicality perspective, they've already started to maybe trigger on a few little execution things in a non-sequenced way. So we try to speed up that assessment. And of course, again, we pressure test the enterprise strategy, check that box. Yes, this will fit. Is there any semblance of a plan, or how is this going to fit into the plan without taxing the rest of the organization and the rest of the portfolio? We talk a little bit about that. And then, typically what happens is either they're in BIN sponsorship, but at a very low level. They're in sponsorship, but in a completely different area than, where they want to be, or they're not in BIN sponsorship yet. And so they need to understand more about, how do I get there? And so typically we'll work with them to build a roadmap. These organizations and these banks normally have some existing infrastructure and the financial wherewithal to make the investment and to utilize sort of, existing operations. We have worked with some that have started from scratch. That is a much longer, pole in terms to getting into market and playing the role that they want to. But with those that have some level of robustness around, infrastructure, they're willing to make some investments, then we typically will work with them to put together a 3-year plan. Because of course, as we know, not everything gets done overnight, nor do you have the money to do that.
Go ahead.
Just making sure you heard that one too. Not everything happens overnight.
And so how do we, instead of trying to eat the elephant, how do we take one bite at a time? And we typically will plan them, work with them in segments of 100 days. Okay, what are we going to do in the first 100 days, the next 100 days? And probably one of the most important things about the roadmap that we work on with them is the sequencing. Because what they don't understand is, like they're out, like they know I need to talk to a network, I need to talk to a bank, or I need to talk to this, all these people, I need to talk to regulators, but they don't really know how to sequence that. So they tend to, if they start executing before we get there, create a lot of rework for themselves. So we try to unwind that a little bit and get the table set appropriately for how do I sequence these things so that I can, again, slow down to then run fast.
I know last night we were talking at dinner about when I spend time with banks that are considering an entrance into fintech or payments, I say, can you see yourself or your organization building product and or building user experience without your core processing platform? If you can't imagine doing either one of those without your core, this is going to be a long road to hoe. If, however, you don't feel beholden to your core, or you could envision that you actually could do this with the right amount of assistance, then I think you've got the right mentality. And I think it's that line so often that I find, and it goes back to this idea, we've talked about this on the show, dependence on the core processing platforms. If you have complete dependence, even sort of a mental organizational dependence, fintech's going to be really, really hard to do, because I think one of the reasons fintech has been so successful is that they've been built without dependence on the cores.
That's right.
No, I think that's actually a great point, because one of the things that we're starting to see more and more is sort of credit unions and community banks very interested in getting into this space. And they're concerned about becoming irrelevant, because everybody's working with fintechs and now they need to be working with fintechs. And they're trying to figure out how to do that. And so they think payments is like the perfect solution. But that's the thing that they keep getting caught up in. Like they can't get out of their own way in terms of their core. And it's got to ride on our core, and it's got to be integrated to our core. And again, to your point, I mean, you've got to have agility here. When you have a fintech as a partner, and you guys know this better than anyone, they want to be in market yesterday.
That's right.
By the way, they know nothing about the space. They want to be in market yesterday, right? And so I think that unless they figure out this core issue, which now there's a lot of providers that can help bridge the gap there, that they're going to have to partner with. I think unless they are willing to do that, then it's going to be very limiting for them. Yeah. So I think that's an excellent point, actually, in terms of criteria.
Well, look, I think anybody that's on the podcast or listening to the podcast, if you find yourself in this spot where you're thinking about where your organization fits in the fintech ecosystem, the first call should be to Sherry or Shelley, because I think for somebody to come in who has sat in the seats and can kind of help you lay a plan out and help you sort of hopefully miss a lot of the bumps in the road that all the rest of us have hit, it's going to be critical for your success.
Yeah, I agree. And actually that shoehorns nicely into the thing that's been rattling around in my head as you've been talking today is there is a natural tendencies, especially entrepreneurs. They want to go fast. They want to go now. They want to your point, be in market yesterday. And intentionality takes time. A strategic plan takes intentionality. How do you help entrepreneurs who are so twitchy and want to be in market yesterday and have so much concern around the hustle and the race that it is crucial to take a step back, do the intentional hard work because the results are so much greater? How do you convince somebody with that mindset that you do need to, in fact, slow down in order to go fast?
Yeah, so actually, I have been working with an organization that's all of 4 employees. And one of them is the primary investor and, also the CEO and also, right? Because, you wear many hats. And, the other 3 employees were really being very vocal with him about the fact that, like, we can't consume this all. Like, we're trying to get our first client, we're trying to build a platform at the same time. We're trying to do X, Y, and Z, get a new bank, get a new, distributor, everything all at once, right? And so, we don't do large scale. Strategy is still important to them, and really understanding like what are the key things that we're going to do and what are we not going to do. But we do it on a much smaller scale. I spent the day with them, and they basically told me, I said, here's the frames. What do you guys have going on? And we kind of went through everything, and they made like 3 decisions. We're going to do these 3 things. We're not going to do these 3 things for the next 6 months. Can we all commit to that? We can all commit to that. Okay, great. You're not going to do, again, robust, large-scale strategy and planning with 4 people. That is an organization that literally is still in feasibility. They've been in business probably 5 months. Hugely successful already, which is, obviously lighting up the entrepreneur, investor, and CEO, right? He's like, just go, go, go. And so he agreed to do a couple things. The team agreed to move a little bit faster on some of the implementations, but like, literally 3 things we're going to do and 3 things we're not going to do. We're going to just put off, and we're not going to discuss until we get through, these 3 things.
And that's the way it is here too, because I'm always telling Nikki, you got to stay more focused, Nikki. You got to keep your head down and quit being distracted by the shiny objects out
would
here.
spilling his coffee on him be an okay idea or a bad idea? I'm just checking on that.
I'm confused over here. I'm not reading you that way, Nikki, but okay. I'm going to go with it.
One thing I have found in this engagement is you guys are not all theoretical. There are so much practical elements that come out of it. And I find that although I don't sit on the entrepreneurial kind of naturally always coming up with ideas and always go, 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 there is a tendency to go, oh, theoretical, we could live in that playground forever. But practically, you do speed up the game because you have such practical outputs. And I find that extremely beneficial too. So thank you for that.
Oh, well, thank you very much. I appreciate that.
And in addition, thanks for joining us today. This has been great. And I think...
Thanks for inviting me. This is so much fun being with you guys.
It's awesome. If anybody wanted to reach out to you, what's the best place to find ROIG Group, get a hold of you directly, Shelly directly? How does somebody do that?
So go on our website, www.theroiggroup.com, or you could reach out directly to Shelly or Sherry, myself, or Shelly, and it's sherry.thornsberry@theroiggroup.com. So, or you can call Nikki and Trent.
You
and
could.
they
Call
can
us.
give you my number.
Absolutely.
Fair.
How's that?
Absolutely.
That's exactly right. Well, thank you so much. I think you gave everybody a ton to chew on and think about, and a ton of ahas throughout the conversation. So
Thanks to both of you.
Thank you. There you have it. We hope you enjoyed this episode of Fintech Brews and News. Keep up with all the content and cool stuff happening at Falls Fintech and Central Payments by checking out our website, our YouTube channel, LinkedIn, and Twitter. Subscribe to this podcast so you don't miss out on our next episode.
I'm Nikki Rohde.
And I'm Trent Sorby. See you next time.
Cheers.